It is Thursday, September 2nd, 2010. My name is Des Woodruff. I'm a mentor and analyst here at Grok Trade. The markets continue northbound. Let's look at this. The Dow up 0.5%. The S&P up almost a full percent, more than that on the NASDAQ, and the Russell's more than that. We have the VIX down almost 3%. I like to see that. It does confirm what we're seeing here on the other indices on the bullish side of things, but things are simmering down just a little bit after hours here. Gold did go up ever so slightly with a very nice bullish trend for all you day traders out there. Check this out. We're looking at the S&P daily. Let's blow this up so we can really see things here. We had a huge pop to the upside, finding resistance at the 50-day simple moving average and the 20-day simple moving average. Normally, what happens at that point is after a major run, a lot of times you will get a little hang up the next day, either a doji or a spinning top where it wants to catch its breath, much like over here. You see this, we get this pop and then the next day is a red candlestick. Very, very typical. See this pop and you just kind of hang up there. Today we did not get that, but instead we get continuation. We have a higher high, higher low, which now we're in a defined up leg, and with an up leg you definitely want to be bullish in this scenario, not bearish. I like that we cracked through a trend line coming across. I like that we are above the 20 and the 50-day moving average. Listen, for anybody that's a day trader, definitely bullish, and perhaps going bullish again. I need us to get over, let me show you this. This line coming across is about 1092, 1093 is the area of resistance. See that resistance, support, resistance, that's where we're at. So be watching that 1093 area. It needs to get through there. And then we have a huge trend line coming down here, which is going to be right around that 1100 and some change. So as a day trader, you can certainly be bullish here. As a swing trader, we are in the confines yet again of a symmetrical triangle. The rule of thumb in technical analysis is this is looking for a breakout pattern or a breakdown pattern. So right now we're looking for either a breakout over the top of this trend line or a significant breakdown. Listen, last week we had a big chance of a major breakdown taking place. We come down here, we broke below it. What was acting as support now started acting as resistance down below all major moving averages, and you get what's called a low base formation. At that point, the markets, technically speaking, have a much better chance of going down than going up. But as a savvy investor or a savvy trader, we never guess. We don't guess what direction it's going to go. We play what we see. So in this case, I'm looking for a breakdown under 1040. It never happened. So with that said, when we popped yesterday, I was hedged. I had longs still going, but I was hedged. So when it popped, when we started breaking through each of these resistance points, I have areas, I have stops on my hedges that will go in and start unraveling or taking my hedge layers off. So by the day's end, I was obviously very net to the bullish side. However, I tightened up areas for hedges to be re-added if we did drop. However, they never did trigger, but by day's end, I went ahead and tightened them again. I don't know if they will trigger tomorrow or not. If we keep going up, they will not trigger, so I will remain bullish in this market. However, please be careful if you are an investment trader or a swing trader going long right now. The couple benefits that you have is that you're above major moving averages, and we healed ourselves by coming back within this triangle. But the bottom line is we're still in consolidation or in a triangle. Do not lose sight of that. And here's the other thing. On the MACD down here, we're trying to fight to go above zero. That is very positive. We have a big bullish histogram tick also. But let me show you what is hugely worrisome to me as a technical trader. Look at how pitiful the volume was today. Today's Thursday, not even Friday. I can't even give that as an excuse. We had less volume on that huge day yesterday than we had on the day before. What? Look at that little day and then huge monster of a day on less volume. And then today we closed at the day's high above the 20 and the 50-day moving average on half the volume. Gang, wake up. This is no good. So what that's saying to me is, where are all the buyers? If this was a significant leg to the upside, where are they? Show me the buyers. They're not there. The worth of the move is measured by the amount of volume that you have. Always remember that. So I'm not overly convinced about this up move right here. So just be wary of this. If you're long in the markets, make sure you got some proper stop losses in place. So if it does reverse on you, you're protected and you keep those profits at hand. Hey, something that's pretty cool here, our new chat function is now up. Here it is, going to freeonlinetradingeducation.com, and right here it is, chat. When you click on chat, it's brand new, it just opened, so there's a little bit of chatting in here, not much, but you will line up all the chatters in here. You have to sign in. So once you're signed in, you'll be able to chat away. So, and the other thing that's really cool here, this little pop-out button, I could hit the pop-out button, and now I have this guy. So you can put on one of your monitors, you can move it next to some of your charts and be chatting away. So I'm calling all day traders, all investors, all traders, come in and come back. We have a wonderful thing here. Take advantage of it. Looking forward to seeing all of you chatting in here tomorrow morning. Take care and safe trading.